Hey, welcome back to the channel. Today we're driving into one of the hottest, most controversial income ETFs out there. That is ULTY, the YieldMax Ultra Option Income Strategy ETF. The question everyone's asking, should I buy, hold, sell? We're going to break that down today. Hey, I'm Doug, the retirement guy. Want to just say welcome back. After our little penalty in the box, we're back giving you guys the information you need. And also, hey, we opened up a second channel that we do all the monthlies. So if you have any questions about monthly ETFs, check out our other channel. It'll be a description in the box down in the description below that you can click and join that station just as well. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This is for educational and informational purposes only. If you need any financial advice, always go to a financial advisor or professional to make those decisions. What is ULTY? Well, ULTY is designed to pump out massive monthly income using option strategies like covered calls, covered collars, and put spreads, and a volatile growth stocks. Now, when we say massive, we're talking 80 to 90% distributions. So the reason why, and you have to ask yourself this, why am I in ULTY in the first place? If you're looking for growth, you're in the wrong department. If you're looking for the massive monthly income, this is what it starts off with, but you got to take the good with the bad. So for all the dangers at it, first, the sky high yields come with very, very high risk. The second is the option strategy caps your upside. If the underlying stocks rip higher, you won't fully participate in that upswing. And third, in a bear market, the fund can take real losses, and those fat payouts may not be enough to offset the dropping price. The downside is that NAV erosion. So I'm going to put it real clearly to you. You can get massive income of 80 to 90%, but you have to be prepared to take the high risk that you're going to lose a big chunk of your original initial investment, which is that downside of that NAV erosion. Okay, if you're not comfortable with losing NAV erosion, picking up the 80% and playing the game the way that it's really designed, then you again should not be in ULTY. So we take a look at the chart. You take a look at this. This is only back basically the last, well, probably about 90 days. This thing was a $9 fund, and it dropped all the way down to just above a $5 fund, $5.50 from $9. So you can see we've lost a chunk of this thing here. It's down over 37.83% as of doing this video from this one quick segment, which is about 6 months out. So you better be getting 80 to 90% distributions, because you're losing almost 40% back to NAV erosion. So the forecast is what we wanted to look at here, and I wanted to share this to you. And I brought this to you about a month ago. We shared this with you, and we wanted to see how close the forecasting is actually doing. And that is the new overall look in short term, between that 3 to 6 months, there's a slight downside or sideways movement is probable than the big gains. So the price holds between that $5.50 and $6, which is exactly what we're seeing it doing, unless there's a favorable volatility environment or something that boosts the underlying holdings. There is a risk of drifting lower. So what they're saying here is, if we have the volatility of a marketplace, which we're on one hand, we're not seeing a lot of, it's kind of been calming. It's calming down. We're waiting for something big to happen. If the interest rates are going to be the big piece, if just something's going to change and tariffs are going to change again, we're waiting for that. It's just calming down. It's waiting for that big moment. And then basically is, if something dramatically and technically it drops off, we're going to see this thing drop even lower. But right now it's holding that $5.50 to $6 range. The 12-month, what they call the medium term in 12 months, The modest upside is getting into that mid-$6 to $7 range if things go well. But the upside isn't huge because the risk distributes the total return even if the price doesn't move. So realistically, this thing is in the next 12 months, you maybe get to a $7 range. I do not want to overestimate that. You're probably more in the mid-6s, which is where we were just a few months ago, where people were starting to really jump in this and they thought it was taking off. But we're in that basic to short term, looking for that midterm, and this is exactly what we said just a month ago. The forecast is right on line, and it's not making it up at that $5.50 to $6 range. And when I looked at it first thing this morning, we were at like $5.60. So we're falling right into this part that the forecasting is right. So there's some positive looking out for. So why would anyone want to buy ULTY if everything I'm telling you is that we're not going to have much growth? We're parked at a low bottom, about $5.50 on the share. We're losing 40% over 6 months. We're only going to gain 80 to 90% best for a whole year of distributions. So it's really, is it a cash cow? Is it really making money? Why would you buy into this? Well, one is, of course, this is the cash flow. If you are an income-focused investor, there are very few ETFs that distribute this kind of weekly money. The number two, the managers have recently adjusted the strategies with more hedging that helps reduce some of the NAV decline we've seen earlier in the fund's life. So we've seen this when they made the change from monthlies to weeklies, that they made a huge adjustment. They made a wholly different way of going to go off the market, and it was working, and it's winning. And they've had to make another fine-tune adjustment again because the NAV, the erosion, is killing that marketplace. And number three is kind of sideways or slightly volatile markets. These option strategies can generate real profits while still paying those weekly checks. And that's the thing. We need the volatility to generate that income so they can continue to pay it. That's a concern I have right now. And this is the number one thing I'm going to say is I have a major concern of ULTY from things I've been starting to see reporting on. And one of them is that we don't have the volatility in the select pieces that we need. When we take a look at their dividend side of it, it's flat, exactly what we want to see. It is paying out on a regular, continuously basis. It's averaging about 10 cents per week. But then this is the kicker to it. This is 1 month. Okay, it's down 5% over the month. Now, I show you this for a reason. If you take a look at it at the beginning of the month, which is August 18th, we were close to that $5.90 range. It dropped and recovered back up to $5.80. Since then, it's dropped down and it's coming back up. So some of the changes that they're making is getting the fund to take over some of that NAV loss and regain itself. So it's starting to take effect at doing the positive. So I'm positive about that. I'm a positive person with they're trying to control this NAV loss because they don't have much more to go, guys. They don't have a lot of money sitting there to do things with, and they're still paying their dividends. Volatility would change this thing in a heartbeat, but we can't control that part of the market. So let's look at some updates of the ULT. I call it on a bad streak, but on forecast. Okay. Here's what we got. This is the report that we do year to date. You can see where it was at that 9 all the way down to the 563 a day of reporting. 1 month it's down at 5.17, 6 months down 15, and year to date it's down 38%. Now, this is exactly, I fine-tuned it even more for you to give you a 5-day picture so you can understand what I'm talking about. This is what was forecasted. They forecasted this thing to be in that $5.50 to $6 range. And you're going to bounce like a pinball. You're going to bounce up. You're going to bounce down. You're going to bounce sideways in every which way. And if you look at this, it started at 560, bounced up, came down. On 9/11, it dropped dramatically. Okay, and now it's coming back to recover all the way up to September 16th, where we're having another downward drop. It's a cycle. It's going up, down, but it's holding what we call that sideways pole, which is $5.50 to $6. This is what's forecasted. So that's why I say the forecast is actually accurate to make sure we know where we're going. No surprises here. When we take a look at the dividend announcement, and I showed you the screen before, it's been very flat, paying about 10 cents per week. We take a look at the dividends that are laid out all the way back to June. And there's a reason why I put this one in here. If you look at June 20th, it paid 8.75 cents. Then it started its climb up to 9.23, 9.52, 9.6, 10.3. Then started its downward trend from 10.3. So that's like the ceiling that it's hitting, down to 10.29, 10.08, 10.03, 10.06, 10, 9.49, 9. Then we're going back to 9.28. So I'm looking at a slight pattern here, and I don't know if I'm just overreading things or dialing into things, but when you take a look at June, we went from 8.75 to 9.23 to 9.52. Look what we did here. We went from 9 to 9.28. So we are within just literally tenths of pennies watching the September starting to do what it did in June. Now, I'm not trying to be optimistic. I'm not trying to blow smoke in any which way. I'm just looking at this and saying there's a pattern that's coming back. And I've seen this like 3 times this year alone. So I believe we may be on a positive track of the dividends coming back up to where they were. So as I continue doing more research, there's something else I found. And really that I'm starting to get a little nervous about, and that's this. Now, I've gotten ripped on this many a times in the comments. You're probably going to do it again, so you're welcome to it, but listen clearly what I'm saying. My concern right now is the return of capital. September was 100%, September 3rd 100%, August 28th was only at 12.82%, but August 20th was 100%. Are we in a situation where the money that we've put in is the money coming back to us and we're not getting any real profits? We're not really getting any money back. Now, I know, and I personally put a video out there explaining return of capital. It explains it that this is a tax advantage program, that this is giving you, classifying the distributions as return of capital, so you don't have to pay the capital gains onto it. But there's something more, and I've tried to explain this in over videos and different times. There's something more to this that I want you to listen to very carefully. 3 out of the last 4 are 100% return of capital. Let's take a look at the assets under management. In February of 24, it was 664 million. July 9th, it was 103 billion. August 1st, it was 2.45 billion. August 20th, 334 billion. What is it today? September 12th, it was $3.04 billion. That's down $300 million and almost a 10% drop in the value. So that means either one of 2 things. One, they're selling their assets that they have on covered calls or covered puts. They're selling them off, which is going to kill the amount of assets under management that they have. The other thing is, are they forced to sell that off to pay the 10-cent dividends? And that's what I'm concerned with, and that's where it's telling me that the return of capital is actually not a tax advantage, but this thing is starting to pay back the real assets back to you and I, that we're not gathering up the income that we think we are. So losing 10% of your portfolio like this is huge. And we are not growing, we are dropping. This is why we are on this on a weekly basis. You will see this next update with all the YieldMax, or excuse me, not YieldMax, but all the YieldMax ETFs, the weeklies. We will do a report as much as we possibly can each and every week, watching this exact number on every one of their funds, and especially on ULTY. So look for those reports normally on Wednesday, no later than Thursday. We will continue watching this. So this is my big concern, and I hope you guys are concerned about it, that this could be the start in the fall of ULTY losing its value. So we go back now into the return on investment. For anyone new getting into this, this is still going to put you at about 56 weeks or 1 year. Just a hair over one year. I know everyone always gets picky on that. But right now it's still holding that 10-cent average at that $5.60 rate. So you're about $5.56 weeks. So the question is, this is a buy or hold. Well, here's my take on it. If you're a risk tolerant and you want to juice up your monthly income, ULT is a speculative buy. Now, what is a speculative buy? I'm telling you right now, this is one you are not going to put all your eggs in one basket. I've seen videos out there, retire on ULTY. You are not putting all your eggs in one basket. You have to know your risk tolerant. You have to know everything about this, that you're going to put money in and you're going to lose value up front, but you better hold this thing for at least a year before you get your money back. So to me, this is what we call a small satellite holding, which is you only put so much money in that you can lose and be done with it. If you're focused on capital preserve, I'm telling you right now, and you hate volatility, you need to sell. You need to get out of this, strictly because this is not a fund that we're going to see much growth onto it. The forecasting over 12 months, we may only gain $1 in share price. Okay, 1 year to get $1. So again, this is not one of those pieces. This is one who wants to get the income on that weekly basis and go from there. So my stance right now is hold for income hunters, but not a core holding for long-term investors. So what's an income hunter? Well, I'm going to say it's probably just like myself. I am constantly looking what is going to give me the most income across the board. I'm not worried about how the fund is built, which you're in 10 different funds, you're in 20 different areas. I want to find how much income can I get each and every week to just keep adding to my portfolio. Now, if you're looking for a long-term investors, this is not a core holding. This is just a bonus thing. This is one of those that it was fun, it was exciting, it was great at the time, but this is no longer a key core holding that you're going to set and hold forever. I believe at the time of this is gone, and it's time to look other areas and other paths. Now, I know you guys are all going to be against me on this one, but the numbers are showing the truth, and that's why I'm giving you the truth. Is with it losing its value, it's losing its assets under management, it's going to make it harder and harder for it to maintain that 10-cent payment. So again, in my eyes, this is a complete hold. You need to have an exit plan on ULTY. You need to quit investing the money. I've already taken the dividends or the distributions from ULTY and channeling them off to other areas just to build up, try to rebuild some of the recovery back to it. This is not someone who's angry about losing money onto it. I planned it all the way through, but I just see this thing as it's time to make an exit plan and get out. It's dropping. The assets under management's dropping to 304. That's 10% loss, guys. We lose it again, we'll be under the $3 billion mark. And you may say, we've still got billions out there. If you're losing 10% in your assets under management, it's like a drain. It's going to drain fast. 1 year on that return on investment, the thing is down 5% over the last 30 days. So it's still continuously dropping. And the forecast is really only has our price between $5.60 and $6 over the next 3 to 6 months, and really only $6 to $7 over the next year. And that's 12 months to get that done. Guys, I'm Doug, the retirement guy. Welcome to be back. And if you like what we're doing, hit that button. If you're not a member now, we're going to continue to add as many subscribers as we possibly can. Hit that subscribe button. Welcome to the community. On top of that, if you guys like it, don't like it, leave a comment down below. Love to hear your thoughts on how the assets under management are falling on ULTY. We'll catch you next time.